Okay, we're going to talk a little bit about encumbrances. I'm going on page 162, E4-6 is the problem, and the concept of encumbrances basically is kind of like a reserve. Okay, we're saying that these funds are encumbered, don't spend them for something else. It helps with us with like contracts if we have committed, so the funds don't get spent again. Or if we've got a purchase going on, we don't want to spend the money again. Okay, so it's a budgetary type of control, really, is what it is. So we're going to have Martinsville ordered supplies for its general fund departments at an estimated cost of $300,000. So we're going to have encumbrances for $300,000. And often in the accounting system, you'll have those tied to a specific account. So if it's in your special revenue fund, for example, you may have that money kind of restricted. Basically, is what it is. Okay, and then we're going to have what's called reserve for encumbrances for $300,000, and that's for our encumber the funds for the order of supplies. It's not an expenditure at this point, it's just an encumbrance. So we've committed the funds, we haven't actually spent them. Okay, so number two, we ordered equipment for its general fund at an estimated cost of $490,250. So this is a good example of an encumbrance. So we're going to have encumbrances $490,250. And we're going to have our reserve for encumbrances of $490,250. Basically, what we're doing here is we're saying those funds have been spent, equipment's been ordered, don't overspend them. So that's a budgetary thing that says, okay, even though we don't have the expense on our income statement yet, it is, and that we've got it allowed for. So for example, I have a version of our income statement at Mark where we print the encumbrances on there, so the person managing the different grants or the different funds knows that we have already committed those expenditures, so we don't want to overspend them. So that's what basically what encumbrances are used for. On number three, we received half the supplies ordered. The actual cost of $151,000 was paid. So we are going to, first of all, release our reserve for our encumbrances. So we received half of them. So we're going to debit our reserve for encumbrances for $150,000. And we're going to credit our encumbrances, which is basically releasing the funds. Okay, so notice we didn't do $151,000. The encumbrance was set up for $150,000. There could be some variances, which we have here. So then we're going to record then the actual purchase. So that's when transactions taking place. We have expenditures $151,000, and we're going to have our vouchers payable of $151,000. Okay, so that's receipted supplies, recording the voucher that we will pay. Okay, let's move on then to number four. Okay, Martinsville received half the equipment that they had, received the order, that all the equipment that they had ordered. The actual cost was $490,250. So it was the actual cost that we encumbered. So we are going to reverse our encumbrance. So we're going to reserve for encumbrance. We are going to debit that for our $490,250, and we are going to credit our encumbrances to remove it, remove that restriction on $490,250. Then we are going to record the actual expenditure. The transactions has taken place. We've received the equipment, so we are now owed the money. For $490,250, and that's a receipt and to voucher that payment. Now the other thing to remember in this case is that on our general capital asset accounts, equipment's going to increase by that 490,250, and our net assets are going to increase by the 490,250. So not only recording that expenditure in our general capital assets fund, we're going to be recording the receipt of that equipment as an increase in our assets. So that is it for encumbrances. It's really a fairly simple topic. It's a little different in that it's than for-profit counting, but it's really kind of a budgeted tool to help us to designate that we've spent these funds. These funds are committed, and not to don't spend them again. And then once we receive them, then we'll reverse those encumbrances, take them out, and record the actual expenditures.